All right. So, hello everyone. Let me stop that annoying music. Here, this is me, Guillaume, and I'm joined with Isabella, Izzy, for those that know her, from the Panoptic team. Rosalie and the intern are taking a well-deserved break, and in the meantime, it would coincide with our push to recruit Uniswap LPs a bit more. But we will start with me instead of teaching Rosalie how to trade meme coins better. I will teach Izzy how to be a bit LP and use Panoptic for hedging, for LP management, but for generally anything LP related. Uh, the title of this show, this is going to be for the next couple of weeks. Um, Conversion therapy, LP to options. So, first of all, Izzy, how are you doing today?
I'm good. A little bit nervous. Big step. So we'll see how this goes.
So, and then, so wait, you're nervous about losing your LP positions or putting
Um,
both feet into
yeah, just
Panoptic?
trying to wrap my head around it. My deep options experience is from passing my serious exams where you need to know puts and calls, and that's as far as it go. Maybe some covered calls, but you know, as soon as I hear theta, I get nervous.
It doesn't have to be scary, but yes, Theta is indeed a scary Greek. And so, again, maybe some background. You've been using Uniswap for a while too, and then you were doing probably what most people thought, but then choosing your range. But yeah, can you tell us about your experience in the past about Uniswap LP?
Sure. So I first got introduced when it was still Uni V2. So I think most people felt pretty good about Uni V2 and could kind of wrap their brains around it since it was just a pretty direct formula with a pretty direct like kind of payoff curve. And then V3 was just announced, and so I think one of the first people in that wave to think it was kind of similar, choose the price range, and then all of a sudden get hit with that the impermanent loss in a different sense. Um, and so really went down that rabbit hole for a long time. And I think that's when a lot of the different aggregators really started to come out and kind of the yield optimizers as well. Um, but yeah, so that's kind of a little bit of background as well and kind of explored on other groups like Pancake Swap, Sushi Swap, who kind of went off in there. And then there's like groups like Trader Joe's and where you have like the tranches of bins and stuff like that. Um,
And I think the Meteora and some of the meme coin launchers on Solana are using something like Trader Joe's as well.
right.
But again, people probably don't know it, but everything now is a clone of Uniswap V3 or
Yeah.
with liquidity. It's not necessarily easier, but then this is what everything has figured out is the most efficient way of doing this.
Right, right. So then, yeah, understanding that, and then of course, coming across your groundbreaking research and all of that stuff. It's kind of how I found you in the first place. Was trying to figure out how I can accurately figure out what my Uni V3 payoffs were going to be, just because you always knew that like when you were in range with V2 that you would be earning fees, and that's still true to some extent. But then trying to understand um, because of the different liquidity tranches across the different price ticks that your returns can be varied right across the different price ticks, just because it's getting split between that many other LPs, whereas it was like everyone got a split of the fees
And
too.
exactly, so the fees were always on in Uniswap V2. You still had the two tokens on the way out. So
Mhm.
yes, you may see a conversion, but you never got stuck with 100% of likely the token you didn't want to hold, which is what happens a lot on Uniswap V3. And as you said, the fact that you can be out of range, this changes the the dynamics. It seems to be a bit more active because yes, you have to manage, you have to change the positions. If it's out of range at 100% uh, shitcoin, you have to swap it back to ETH. So yes, I understand. So that's kind of the most pain points from people either in the audience or people that have been LPing. It's like seems to be a lot to manage to some extent.
Right. The rebalancing was is also the trickiest part as well. Yeah, because you do, if you don't move fast enough, right, you end up taking a hit when you have to do the rebalancing. And on top of that, then you also run the risk of if it's like just a volatile spike and then it comes right back down, where your original position could have been in range the whole time, but now you've rebalanced, taken the loss, and then you have to kind of fix your position again.
Yeah, so this is all something, again, it's still present in Uniswap v3 and Panoptic, how we kind of see the LP management. But once you come in with a options mindset, it's a slightly different playbook, because you could also have static hedging or more dynamic hedging, but you may not have to manage each position individually. So that's something that we've seen with Rosalie, and then we'll hopefully see with Izzy over the next few weeks. So with Rosalie, we're discussing trades, and the intern was following this.
Hmm.
We'll look at a portfolio now from the Panoptic team as well. This one is helenkeller.panoptic.e. So
Yes, very aptly named for.
we don't see it on the yeah, the I actually went out and created a ENS domain for Helen Keller. So this is their position. This is the portfolio that we'll be managing. This is the portfolio that the I mean, Izzy will try to guide Ellen through the dark. And we start with the Uniswap interface, because we have a starting point, which is as an LP on the Uniswap website, you can view your positions. And from there, yes, we see some of the positions that have been created. So there's 1, 2, 3, 4, 5 positions. And I think this is news to you as well, Izzy. But that portfolio contains, I guess, ETH USDC, which is a very, very common uh, pool that people kind of LP in. There's SPX, one meme coin. There's the Uni token as well. There's BTC ETH, which also has a pool in Panoptic, and also Cow Swap, which might be a DeFi kind of protocol. So from I haven't visited the Uniswap interface in a while, but this is kind of it does show a lot on the main interface. So uh, we definitely can move the ETH USDC and BTC ETH directly to Panoptic, but maybe as a LP, I don't know if it helps, but we can go at one of those positions. Uh, so this is the ETH USDC position. It's between 21. No, what's the range? It's between. Wait, how do we see the range? That so it seems to be 100. No, that's not it.
Oh wow, they included the migrate to V4 as well.
Yeah, exactly. So we can actually look at the migrate to V4. Maybe now we'll see the migrate to Panoptic. Okay, this is the part. Okay, if we change this, we see the price is between 1,500 and 2,000.
Yep.
Might be in range over a certain amount of time collecting fees. And this is typically the type of position that you want to be in. Somewhere in the middle, somewhere collecting fees.
Right.
And that's maybe a position that you may have been kind of managing at some point in the past, right?
Yeah, 100%.
Okay, so it's 50.
I don't mind ending up in either, I guess. Although inherently somewhat long ETH.
But it's not super clear, right? What's the
so, right? But that's also my problem is I guess I always I'll always be somewhat bullish, I guess, in some of the stuff that I LP in, because that's also why I like to LP, is just because I like want to hold this but want to earn some yield off of a lot of these tokens. So like the SPX one, even the Cal on Uni tokens as well. Like I'm somewhat inherently bullish on them. That's why I like to LP, because I'm not necessarily doing it because I think because otherwise I would be day trading, right? I like to LP.
Depends, yeah.
Sit back a little bit, right? I like to have a little bit wider positions. So I'm not coming into this as like, taking like strong stances, I guess, on the tokens.
It's just you won't mind holding either of them and earning fees in either
right.
of them.
Exactly. And that's kind of the point of why I
and UniV too, and even
I'm an LPer in that sense.
yeah, and it makes a lot of sense. If it's a coin that you can be exposed to 100%, might as well be one that you care about a little bit, so that if you're thinking about it, you're kind of buying it on the way down, and you're getting to a point where it's a different entry point. But whether you buy it now or buy it over a few weeks, you earn fees, and that's kind of another one. So these three positions, ETHBTC, SPX, and also Uni, I'm looking at, are all in range, and they are all kind of collecting fees, which is what you want to see. And in particular, this is kind of also almost in the middle. It's very, very standard. I would say that these positions we will look at how they can be migrated and managed in Panoptic, but this is kind of a brief overview of your positions. There's two here that are out of range, and I think with the price we'll see what happens. But the ETH
Yeah.
USDC one is not in a good spot. It depends on what your kind of asset is, but it's 100% ETH, and now the ratio is weird. But BTC has overperformed ETH. The position that was in range for a while now is fully converted to one asset. One thing that when we'll show the migrator app or the migrator workflow on Panoptic, but when you're out of range, what do you want to do? You will still want to be in range, slightly off. So that's kind of one decision point that we'll have to make. But that might be also something that, I mean, ETH is fine, but cow as well might be something that you might have been exposed to where you had some range, but then the price left that range and then you're stuck with some coins.
Yeah. I will say one of the things when V3 came out, right? So when you start thinking about impermanent loss, one of the tricks, I guess, was to always kind of study the correlation ratio between the assets, because the more correlated they are, the more they move in sync, and then you can limit your impermanent loss because of both, right? It's when the prices diverge is where you get really put into the tough situation. So like with BTC and ETH right now, right? But like you're saying, I guess, yeah, you study, right? Like at one point it was fine because they typically moved in tandem. And so that's why I think most people didn't mind LPing in the ETH BTC pool, and everyone was kind of bullish the two. But as the years, especially this last year,
exactly. So if we look at the ratio, and this is something that even with Rosalie, we've looked quite a bit, but over the past year, and oh, God forbid, all time, since Uniswap launched, it's been all the way down, and it even has seemed to accelerate over the last year or so on the ratio. So a lot of folks may be LPing, but you're leaving, constantly rebalancing and buying back. So this is, and this is normal. A lot of, and oh my God, bunch of dormant liquidity here. This is a different view, but we see that a lot of the liquidity, millions of dollars is out of range. And a large number of very active LPs are back here. But all right. So this
out of range liquidity, though, like you can almost think of it as like a call option, I guess. Or
yeah, exactly. So this is kind of how you think when we think about Panoptic. These positions are 100% ETH, the same way that your position, which is not as far off, but still 100% ETH. But yes, you would expect the ratio reverting. Depends which coins you start with, but it would allow you to get covered call option, meaning that you sell back into the other underlying asset, earn some fees. And but one thing that is a bit difficult also to grasp is what do these positions look like? So again, we've used Uniswap and Panoptic for a while, but all of these we will show what they look like in Panoptic, and that's going to help guide a little bit how we do the conversion. So this was the Uniswap interface, and this is Bleeding Edge sneak peek of the Panoptic interface. And the same account, Helen Keller, is you can spy on that person or look at it, but we also show the Uniswap positions. Currently, there are 6 positions. This is wrong. Yeah, 5 positions open. At least we try to show a similar level of information, but this is the same ETH USDC and SPX and Uni. All of 3 of them are in range. Currently, this one is out of range, ETH BTC, and also the cow swap one is out of range. So one thing that is, and then we'll look at the parameters and try to replicate it, but yeah, maybe very soon when we push this, everyone that has a Uniswap V3 LP or NFT, it will show up on that interface. And there's also going to be a migrate button here where we show kind of all positions as well. But first of all, let's look at this one position here, which is the ETH USDC one. This is what the migration will look like, where we see on the left what the Uniswap position looks like. And on the right, it's the Panoptic position, which is involving maybe some options or something else. But currently, we allow transitions to be one to one, exactly the same parameters, exactly the same size. All of it can be migrated one to one to Panoptic. And we don't say yet what it's going to be at the end, but this is kind of the first step where you can take exactly what you have, transfer it to Panoptic. So we still show the price, still show the range. And in your case, maybe if I zoom, if this is your position on Uniswap, and I tell you you get the exact same thing on Panoptic, is it enough to convince you, or you need to be convinced a bit more than that?
I would do it, but just I mean, I know what's happening on the back end, right? But my first thought, I guess, would be, okay, what is right? Like, what's my benefit here? Because I'll just be trading the exact same range, so I'm not mad about that. I guess I would, but I know on the back end, right? Panoptic's an options protocol, so I guess I would be kind of wondering, like,
Yeah.
what's going to be better here?
So we'll go from that, so that we can show some customizations,
Right.
and this, you can do it on leverage as well and increase your size. But if we take the exact same one and transfer it to Panoptic, now I'm going to cheat a little bit. I'll go to the trade page. But what was just a position that's in range can be a bit more different on the Panoptic interface. And I'll use this tab for now. But you have, in more likely than not, something that looks like maybe a bit wider than that, but something that looks like this, where you have some range that you choose between 1,500 and 2,000. Similar to the other one, we show the existing liquidity, we show the range, and that is your position.
Right.
One thing that people may not be aware of, that there's different flavors of LPing depending on whether you're bullish, bearish, or neutral. And we don't necessarily show this on this interface, but this is just to illustrate same position, same range can exist both in Uniswap or in Panoptic.
Right.
There's just slightly different flavors to each one.
Right. So as an LP, right, I guess kind of what I was saying is, like, you're sort of inherently bullish, right? Kind of like, because I mean, I know, right? But what you're essentially doing is you're selling a put, right? I'm adding liquidity, and the worst case scenario is that I get sold out on the bottom end, right? And I get stuck in whatever token, and I get traded all the way down, and let's say, like, the bad asset goes all the way to zero. So, like, if I'm ETH USDC, like, if ETH goes to zero, I'm going to be sold all the way into ETH, and it's just going to keep plummeting down, right? And then I'm stuck. If it goes up, I'm happy, and I just get sold out at a certain point. And then I guess if I'm out of range, I've kind of sold like a call option.
You're back to USDC?
I'm back to USDC, right? But if my position's still open until I do something, right?
So if it's still open, you still have USDC in your wallet, or that NFT is now 100% USDC.
Right.
It's static. There's nothing that happens beyond that.
Right. I know. I'm trying to think, just because like, think about all the Uniswap liquidity that hasn't been moved, right?
Yes.
I just, especially when I'm seeing it that it's so high up. So I know people don't want to lock in their losses. They'd rather hold it and kind of wait.
Yes.
But I guess in my mind, I'm thinking that the best case scenario is that maybe it goes up. I mean, best case scenario is that it stays in range all the time. I'm always earning fees, and I have 50-50 of everything, and I don't
exactly.
But that's a pipe dream.
I mean, UniV2 was that, and you can be extremely wide, like could be between 700 and 4K type of thing.
Right.
You would be earning fees, but yeah, the end result, when you're out of range, you're basically still flat, and you're exposed to the other asset. If it's two tokens that aren't USDC, so for ETH BTC or ETH Uni or ETH SPX, you should not look at the price in dollar term, but price in the ETH maybe as your numeraire. But yeah, you are just holding depending on which asset, but you're holding one asset and it's not moving. So if we go back to that position, which was kind of narrowly defined, as I mentioned, if you are LPing now, more likely than not, you have some ETH, some USDC, you buy the other token, and then you put the two tokens together into the LP position. Because you buy, you still have kind of exposure to both. And if the price goes up, you have kind of a fixed exposure. So that's why, as you said, everything is inherently bullish, because if you look at the payoff, this is what you have. But as a LP, this is what most people do. Even if you get an airdrop, even if you get a free token somewhere, or if you buy it, you are always exposed to that short put payoff.
Right. And I guess that's what I mean when I say like you're sort of inherently bullish, is that you have this kind of payoff.
Yeah, and then that's kind of by construction, you can only be bullish unless you short a token, unless you borrow some of it, unless you are doing something that is not just buying. And if I go to the extreme, the same price range, we call this bearish, but the same price range can have a totally flipped payoff. And the way you do this is that you borrow, in that case, you would borrow a bunch of ETH and LP with it and supply your own USDC. Because you borrow, now ETH is short, you have to pay it back. You borrow it at, I don't know, 2,000, the price goes to 3K, you have to pay back more. So the fact that you can borrow, or you can short, or you can change the exposure by having a borrowed component can now shift the same exact range, same exact LP position from just bullish to fully bearish.
Right.
And if you can borrow SPX 500, 6900, or any meme coin, you could also have, it might not be impermanent loss per se, but you have losses if the token moons, but then you have a different payoff profile. If the token craters because you're short it, you don't get any loss. So you have a debt of one SPX 6900 token, and you're owning one token, so it's the same thing.
Right. So I'm shorting the LP token.
Yeah. So the only way you can change the directionality is to borrow some tokens. In Panoptic, we have a lending component, a lending market, if you want. That's part of it. So most people on Uniswap are bullish if they are hedging themselves on the perp exchange or by borrowing the asset as well. They can be bearish or neutral. And when you look at neutral, the payoff might be what people think when they have in mind impermanent loss, but now it's truly neutral because you have 50% of the asset is your own USDC, the other half is ETH, and you borrow the assets, you borrow the tokens, and you LP with them. So so that would be another way of looking at the payoff, where you do have exposures on both sides. If the token goes up above your range, yes, you're 100% USDC, but you have a short component of ETH, and you have to pay back, and that's kind of shorting. But yeah, that's a different flavor. So we don't necessarily want to obfuscate too much, but there is some level of choice even from your initial LP position to some directionality that is creating something that is not just pure bullish, but can be bearish or neutral.
Right. So can we just also, if we take that exact ETH USDC position, what would that look like in Panoptic? I know you showed the provide liquidity, but I'm curious the payoff curve, I guess.
Yeah. So if we go back, this is the one position that we for it to load. Yeah, this is the one position we had.
Yep.
ETH USDC, some range. If I were to look at this in Panoptic, yes, it would be a short put payoff.
Right. Okay.
Helen Keller may have shorted it. We don't know, but we assume that we can even look. But yeah, we assume that she didn't see what it was in front of her and just blindly put all of her tokens in an LP position.
Yep.
And whether she bought or sourced or inherited the ETH, she has a payoff that looks like extremely bullish.
Okay, and that's the curve, right? So we're looking. This is between what, 15?
Oh yeah, so between 1,500 and 2,000.
Okay.
And then that initial portion is not quite that, but this is a bit easy to show on the interface. But yes,
yeah.
Kind of in the middle. If the price is in that range, Alan earns fees, and when you look at this, it's just going to shift the curve up and up. The more fees she earns, but if the price goes down, then she's holding ETH, and the price of ETH going down means that she loses more.
Right, and so in Uniswap, if I'm managing my Uni V3 positions, let's say I'm not doing any hedging, I'm not doing anything. The only thing I need to check daily is the price of ETH for the ETH USDC pool, and to make sure that I'm in range.
Yes.
So this range, right? I can obviously choose different ranges for Panoptic, but it looks like it's telling me that this is roughly like a weekly put here.
Yeah, exactly. About a weekly put,
Okay.
given the range and given the exposure. So this is what the position looks like on Panoptic. Let me switch back to the Uniswap page. It's still a similar range, and this is kind of historically, but as you said, you may not have all the information as to how to properly manage it on the Uniswap interface because it's just uh, pricing in range, being in range, earning more fees. But there is this kind of exposure component. And if the price were to leave that range towards the bottom, then yes, you would be owning 100% of that ETH. And price going on means you have one-to-one exposure.
Okay. So if I migrate my UniV3 position, okay.
Yes.
I need to obviously be checking for the price, right? Same as Uniswap.
So it's, yes, exactly.
Okay.
So it's the price range is just like could go up, could go down. It's where you think the action is going to happen.
Mhm.
You can still be extremely bullish, but you think the price is going to be within a certain range in the medium term. Could be weekly or monthly.
Yeah.
The price range is not necessarily as important, I'd say, than the payoff, your exposure that you get at the end of the day.
Okay.
And the same question I would ask Rosalie for the trading show, which is ETH and USDC. If you look at the ETH price, are you bullish, bearish, and neutral? And that would be whether that's going to dictate the trade. The width is just kind of a accessory to it because the wider you are, the less frequently you manage. The more you are, the more frequently, but you can still be bullish, bearish, but in that time scale. So if I say over the next week, do you think the price of it will be bullish, bearish, neutral between 1,500 and 2,000?
Oh, I have no idea. This is why I'm named Helen Keller. I have no clue. This is why I like LPing though. I just choose a wide range and I don't have to pick. And because I was just at the casino on Saturday night. I'm terrible at making these decisions.
Well, we can do even wider. So
Yeah.
if we were to expand the range, I don't know if it helps or not, but if we say between 1,400 and 2,200, do you think it's going to exceed this or go below this or stay in
No,
range
I
over the
will
next month?
stay in that range. If it were between 14 and what, 2,200?
Yeah.
Let's see.
We were at 2,200 a month ago type of thing. So it's not as an easy decision as it seems, but yes, that's kind of the, and we can go wider, even a yearly option, which is going to be between 800 and 3,700. And then long story short, that these questions has to be asked and you have to have a good assumption. And again, trusting your gut is the best way.
Yeah.
But myself included, most of the time I'm so wrong and being burnt so many times that I always use delta neutral, meaning it's going to stay in range. And I'm trying to make it so that I'm right more often than not by using a range that is kind of maybe a bit wider. But then if it does move, then I manage and pick up the pieces as opposed to try to pre-directional and kind of being wrong maybe half the time because it's a coin flip.
Okay. Yeah, I guess I'm trying to think from like other LPs perspective. I mean, not like some of the very actively managed groups, but I do. So are you saying as like an LP who's coming over to Panoptic, like you feel that you have to take a stance on if you're going to be, if you want to be bullish or bearish? Because I guess my main concern is just I want to be in range, right? Like I don't care, I guess, if it's bullish or bearish.
It depends.
I'm apparently somewhat bullish just because that's why I'm LPing in those, like I mentioned before. Like if I'm LPing on Uniswap, it's because I'm inherently somewhat bullish on those
But
tokens.
if there's a very bearish token that you do think needs LPing, then that could be one reason to deploy a bearish strategy, right? So you don't always have to, since you started from that bullish framework and bullish construction of an LP position, then that limits even what you can LP in. Because if you have a extremely bearish stake on the coin, maybe you can make money and be in range still. And as you say, you want to be in range, but the risks are on either one side or the other, or both side-ish, I guess. Yeah. But it's the risk part that you want to increase revenues. You want to make sure that you have profits because it's in range, but you want to also reduce risk, control risk, and say, as I said, I'm more often than not neutral, but if I'm bullish and I'm wrong, then it's going to hurt twice as much. Or if I'm bearish and I'm right, it's going to be more profit than just the fees.
Right.
There is a component that is maybe not appreciated from Uniswap LPs, which is you're directional by nature. Your
Right.
position has some risk, one-sided risk on the downside mostly.
Right.
Now, do you want to keep that risk on one side, or you want to shift it to the other side, or be neutral?
Right. Yeah, I feel like the safest bet. I mean, it's also what I know just from what most investors want to do is just always be delta neutral. And I mean, we could probably save that for another episode, but a lot of, you either borrow the underlying funds on Aave or you buy some perps to kind of try to, hedge your risks there. But if I said I wanted to be, I guess, just plain delta neutral here, or I'd like to be, I'd be fine being more bullish on the ETH USDC pool because I hope that we've already countered closer to the bottom. And I just have more faith in ETH, and I'll be blindly pumping it.
Yeah, so be ready to get your mind blown. But yes, the what we show seems like a binary, like three choices, like bullish,
Right.
bearish, neutral. But there is a lot of grayness to it. And in your case, if you say you're more bullish, then you can imagine that you have something that looks a little bit like that, which is less risk maybe on the upside, more like the same risk on the downside, but you have a payoff now that could match your assumption. You definitely don't. The fact that it seems to be risk on both sides may seem kind of counterintuitive, but you have more capital in range, more capital to work for you, and you offset your risks, say one way or another. You can be 25% bullish, 25% bearish. There's a trade for that. So it's not necessarily something that we want to cover now, but at least from these three choices, the LPs that come in with a bullish assumption and want to transfer into Panoptic, they may have to keep it, or they may have to change it depending on what their assumption is. But that's kind of one component you may not be aware of fully as an LP. You have some exposure, you have some coins that could wreck you on the way down, or if you go on the way up, you sell back to ETH, or you can find a way to kind of change the exposure a little bit.
Right. But okay, so if I'm using the Migrator app, I will get transitioned into technically like selling a put, right, with my existing USDC.
Yeah, so we're debating this. Currently, we may have a bullish, bearish, neutral here, or we can default to being neutral. And that might be something that impermanent loss has kind of built into the assumption of an LP position, is that there's risk on both sides. Even though I think impermanent loss is total BS, but people have some kind of understanding that it's risky if it leaves the range regardless.
Yeah.
And that is what they have in mind when they think about impermanent loss exposure. And that would be what this corresponds to when you transfer. So you would have your positions here. Let's say you have a ETH-USDC. You can use the same range. One thing that we also didn't mention is that you can also do it on leverage.
Right.
You can borrow funds to be short, or you can borrow to magnify your exposure. You can imagine having a 2.5x size for the same position transfer into Panoptic can allow you to step into leverage.
So is this the same as me essentially borrowing funds from Aave, I guess, on top of maybe?
Yeah, if you were to do the same LP in the Uniswap ecosystem, yes, you would be borrowing funds from Aave. You would magnify your exposure. Instead of buying ETH, you buy ETH, borrow more ETH, put this in but because you borrowed as a short component, so it's not quite that, but it's like a margin account a little bit. You have some cash, you can borrow more cash with that cash as collateral, type of thing.
Right.
But as it's built into the protocol, you have these capital efficiency gains that exist, and that specific position has a 6x leverage, meaning that it's technically still a leverage position. It's again 6x in size. So if you go to the max size you have, you are getting 6x leverage type of thing. But that's another component that, yes, you want to be in range. Yes, you want to understand the risks, but yes, you want to also be a bit more capital efficient, maybe double down when it makes sense, and also scale back when it also makes sense too. So you can have part of your portfolio in cash and still get exposure on Uniswap. So might be a lot for the first lesson, but maybe if
Now,
we
for the first
recap,
one, yeah,
yes.
but for the first one, I think what I would like to do is open maybe a matching position in Panoptic, so then I can watch, I guess, how both positions perform, I guess, like from versus Uniswap. Does that make sense?
Yeah. So
Or should I might
in terms of price exposure, it's probably going to be the same. You would have this exposure on Uniswap, the same
right.
one on Panoptic, uh, unless you choose a specific strike. And this is something that we've covered with Rosalie, is that you can now earn in that specific case 18% more
Right.
than Uniswap. So that Panoptic position would be earning more fees at a faster rate in Panoptic versus Uniswap. And then if might as well transfer you get rid of that Uniswap position that earns less, but that's kind of one outcome that's possible. But yeah, we do show, when you look at positions, you can show the historical fee accrual rate, meaning how much fees you collect per day.
Yep.
Maybe we'll have the same one, but with pure Uniswap versus Panoptic. But yeah, maybe to recap, we have a way to migrate your positions from Uniswap to Panoptic,
Right.
where you still use the same range, still use the same exact parameters, but you have this extra choice, which is bullish, bearish, neutral.
Mhm.
And as an LP, you're inherently bullish. You have
Right.
this type of exposure, but you may have neutral or bearish assumptions. And Panoptic allows you to express this all within one protocol. On Uniswap, we would have to borrow on Aave or some other market, keep some cash as collateral there, borrow it, move it back to Uniswap, everything. Now it's all kind of self-contained in Panoptic.
Yes. Okay. Yeah. I'd like to explore, I guess, more tomorrow, the next time, looking at if I could do it all in house, right? Doing the leverage position and then, yeah, doing some sort of delta neutral so that, I think the typical, right, is that you have to go elsewhere to,
Yes.
perks or something.
And I'm not sure if a lot of folks do this, being like managing your deltas. This is what you think about when you use options, but neutralizing your exposure. Maybe the cheat code, if you want. This is the same position that exists now in Uniswap. This is the one that we haven't migrated, but it exists. We can see the range.
Mm-hmm.
You have 1.97 ETH and 2000 USDC in that position, right? So your delta exposure is 0.97 ETH, meaning that if the price goes up by $1, you make $0.97. If it goes down by $1, you lose 0.97. So as a Uniswap LP, to neutralize your exposure, you have to short 0.976 ETH, so that if it goes up or down, you lose nothing. So you have a short on Aave, you borrow 9.76 ETH, unwrap it to USDC, keep it there. That will neutralize your delta. And that would be exactly the same delta neutral exposure you have from Panoptic, but on Uniswap by having, Uniswap and offsetting positions on a per Aave or some other protocol.
Right.
But you can do the same thing with all the other. So we can look at quickly at the Uni token. What I think about a lot when you have a ETH token position, you think about in terms of ETH as your cash or money, and the token is the one that they expose. So in that case, you have 0.572 ETH, 340 Uni. You are exposed to Uni in a way, so you won't want to short 240 Uni, swap this back to ETH. You're neutral on the ratio, on the price of ETH. And that would be your straddle / delta neutral position,
Right.
but currently it's still a very bullish one.
Right. Cool.
Okay, so maybe next time,
Yeah.
with Helen Keller, we'll show the full transition workflow from the Migrate app.
Okay.
We start Migrate. Next time we'll say, do you want to keep the same range or not? We want to do leverage, and we'll have this kind of bullish, bearish, neutral decision. But yes, now we'll do the transition next time. But yeah, the key point is that Uniswap positions Panoptic is managing in Uniswap positions. A lot of what you see on Uniswap is staying in range. When you deal with it in terms of options trade, you have a few more things to worry about, but you have a lot more control. And that's kind of one of the power of doing it all in-house on a protocol like Panoptic.
Right. Right. I think it's just, I'm sure a lot of people feel the same way, but it's just getting used to visualizing everything in payoff curves rather than in, I guess, ranges, I guess,
And
maybe.
one thing that I've seen a lot is that people say, okay, I have a ETH BTC LP token,
Mm-hmm.
ETH and BTC, and now you don't. They think in terms of cash or the price of ETH in
Yeah.
USDC term, the price of
I end
ETH.
up doing a lot. I always just end up transferring into my mind roughly like the cash.
And this is very, very difficult to do, almost like impossible if you ask me. So the best way is to think of one token which is your preferred one of choice. Mine
Mhm.
happens to be ETH, but if I'm denominating everything in ETH, I know I can hedge that one ETH exposure easily. And I say I have some ETH exposure from the Uni LP position, some of it from the BTC. I have, I don't know, 5 ETH worth of exposure done. I could even go on a perp or CME futures market to hedge that if I want to. But it's all kind of in one token that is hedged with a single trade as opposed to hedging all of these positions all at the same time.
Right. So I guess that's back to like what I was saying with the correlation. Like if everything's kind of correlated to ETH, I guess some of like the cow and the uni, like I could just manage my whole portfolio with one.
You trade the ratio. It's one overperform or underperform ETH.
Mm-hmm.
The volatility will be different than the cow USDC or the cow ETH, but it's still there. You extract some volatility, you earn fees. Either ways, and yes, you just have to kind of make it so that it's now accumulating more ETH. That's your goal and target. So that when you end, you buy some cow tokens, you sell it back to ETH, for instance, and this is your profit in ETH terms.
Gotcha. Okay. Yeah. I guess theoretically, right, I can either like delta hedge or hedge each of my LP positions, or I could just hedge the entire portfolio, which I guess is a personal choice.
It's
But
easy. Yeah, I would say that if you have one position or maybe two, yes, you can hedge each one individually. Let's see some of these positions. So some people have many positions open. You can spy on anyone on Panoptic, and I'm looking at whoever was selling positions on that ETH USDC pair, and we can look at their whole portfolio. And this is also something that let's look at ETH USDC. The one thing that with Rosely we were able to kind of expose that you look at the whole portfolio, even though this person may have, oh my god, okay, 1 2 3 4 5 6 7 8 9 positions. This seems like a lot in one market,
Mhm.
but that person still only uses maybe like 65% of their buying power. So they don't put all of their eggs in one basket. They have smaller positions. And I guess with we can see to some extent what their total exposure is for that portfolio. And
Oh,
it's not
that's
just one position
you were
now.
telling
It's
me what I kind of wanted to do, right? Was having this kind of lopsided. Uh,
yeah. So you have some static exposure, which is these deposits. You can see if you include deposits or not. You have a slightly different payoff, but including the deposits meaning that this person has some USDC, some ETH, or like all ETH almost. But yeah, this is their exposure, but it's combining all of these positions. And it seems I can see this is a hedging position. This is a pure short, and they're paying or losing, but it's just to hedge that position. So that is the next layer, which is not just looking at one position and trying to hedge it, but maybe multiple ones. Each has its own role. Maybe one earns a bit more fees, maybe another one is for hedging purposes, but all together, that particular portfolio has negative zero point 0.7 ETH of exposure. So maybe that person is bearish ETH, and they are bearish and making money if the price stays between 2400 and 1400. And yeah, they are earning fees if it's in that range. So
yeah,
that's
this is
how hedge funds think.
yeah.
That's how hedge funds and like Delta Neutral or anyone that is dealing with large sums of money, you don't look at each position individually. You look at the whole portfolio, and your Tesla losses are compensated by Apple gains and maybe treasuries in there. So you look at the whole thing at once, and
Right.
that's your minor model. So yeah, in your case, you have the Hen Keller portfolio had ETUSDC, ETBTC, SPX, Cow, a bunch of those. We can't do cross pools yet, but then you could still imagine combining all of those as well into a single payoff type of thing.
Right. So that it would like, I guess, mimic
The
something.
SPX has tremendous upside, so maybe a lot more.
Yeah.
But yes,
Interesting. Okay. Cool. This was a good first
exactly. So
convincing lesson for me to move over and
perfect.
just
So the next, maybe your homework for the day is: are you bullish, bearish, neutral? Do you want to see maximize time in range, or you want to be directional? Because actually, if you're directional in as in Uniswap LP, you want the price to leave the range. You want the price to go up because you make the most money on the way up, and
right.
you're capping your gains. But that's kind of the best outcome. You should not be sad because it went out of range on the upside. You should be extremely happy. You made
Yeah.
more money than if it did in range.
No, I'm definitely, yeah. I like being in range, but if it goes up on the upside, that's fine. Right. I'm happy.
You started with some ETH or maybe USDC, goes on the other side, you have more USDC. So now you can repeat it's rolling up, but you can repeat the same trade up and up.
Right. Cool. Yeah, I also don't buy into the IL, I guess, theory on the upside. On the downside though, yeah, I'm happy to blame.
It's worse. Even the IL underestimates the real losses on the downside.
Yeah.
It's like square root ish as opposed to the real kind of 1x that we see. So
Yeah.
all right. So this is first conversion therapy. Hopefully we won't. Yeah, that's fine. Conversion theory from LP to options trader. This is Izzy. We
Slowly
went
but
through a lot. Thanks.
therapist Guillaume.
I know. So someone else now needs me to be that therapist. Let's see. We have Steve here as well. So Brendan is not going to be here either for the next couple of weeks. So let's get Steve here from the engineering team. There you go, Steve.
Hey, everybody.
Yeah. So you've been in backstage the whole time. So are you bullish, bearish, neutral on ETH? If I were to ask you personally.
Personally, I'm bullish, but I get Izzy's kind of reluctance to take a stand there because it's certainly not a super quantified, data-backed decision, honestly. But yeah, when I just think about, I try to invest on time horizons of like 5 years or longer. And I think trustless technology is really valuable. And I think there's only one trustless finance chain, and it's Ethereum.
There we go. So sell these yearly options.
That's exactly what I do.
I'm inherently bullish on these things because I'm in Uniswap with them. So like I must be, right? Otherwise
I would have to look, but like Uniswap V2 has been around for like 6 years now. And I'm sure we're back to the first price when it launched, almost, right? 2000. This was like 2020 or 20, I don't know. But yeah, I would be interested to see what's the total return over those 5 years horizon. And again, changing your position every 5 years, if you're in Uni V2, that's perfect. That's the best place to be, because if you're in Uni V3, then you're out of range. So definitely.
And the way I also think about it, there's a lot of really good yield opportunities denominated in ETH. So even if the price has been flat, if you've been aggressive about chasing that yield over the past couple of years, you still have really good gains.
And the mindset, again, similar to what I said, Easy. If you have accumulating more ETH as your target, then you're price insensitive almost. You want to see more ETH in your wallet. If your price going up or down, if you're overperforming or managing your LP positions well, the ratios could change. ETH, for instance, Uni, I think, might have been like underperforming even though it's net up. That's the type of thing that you have like a lot more control over than just trying to say, okay, let's get the best price in and out. But now it's just, yes, let me get more ETH as much as possible.
Yeah. Something I wanted to ask you today, actually, with this recent Uni incentive program, I'm curious if you have any opinions on what that will do to price.
To price of ETH, I'm not sure. Price of Uni, I'm not sure. I don't think it's as bearish as people think. Yes, you may auto sell, or yes, you may keep some of it. It's a drop in the bucket, I think, compared to what is traded on centralized exchanges, and it can absorb 10 million. I mean, it's less than that, like maybe 1 million or 500,000 per week. So I wouldn't say it's inherently bearish. You had to think about now you have more activity, more returns, more market share. That's bullish for the token type of thing. So it's an investment. Mm-hmm. But back to even DeFi summer, back to again, when Easy maybe might have started, when you had crazy incentives where you LP a token, you get 400% returns on that token on incentives that they get directed to you. They're just pumping the IV, and hopefully you earn enough so that when it does crater, you're not exposed as much, and you have like a little bit of coverage. But yes, the unit incentive now on these specific pools is just a way to pump the IV, make it so that you have more returns for the same activity. Uh, you earn fees on the realized volatility in these pools, but then this extra makes it more valuable, and it scales. Like you won't necessarily hit a market limit if you want to. In a real options trading, in a real options market, the IV is market driven. Now there's always a fixed premium, which is better for the LPs.
Okay, so then, yeah, given that opinion, because I think a lot of people are probably checking out the Explore page on Uniswap. I don't know if I'm able to share it, but I can send it in the chat or something. But when you look at the UI here, you have a couple of smaller pools that are showing APRs that are pretty wacky, right? 50% plus. And I think people are just always skeptical of that in small pools, right? It can change quickly. But then you have bigger pools, like number 6 is, native APR is 39% for the V4 ETH USDC, and then the reward APR is another 46%.
Ooh.
It sounds like you're willing to actually add those together. You don't see the reward APR as fuzzy.
No, actually, yeah, I think it's a real. I mean, the APR is also misleading because as we saw even with Izzy, the ETH BTC liquidity was extremely misplaced. Like 90% of it was out of range, but it still counts toward TVL, which is what I think these APR are claiming. But I would say that this one that might just be better distributed in terms of liquidity, and there might be, I mean, it's gainable a little bit, but yeah, there might be a slightly better, yeah, more distribution. Most of what's important is in that range that it was over the past few weeks. And yeah, I don't really believe this, but if the APY from incentive says 50%, then I believe it.
Cool.
Yeah.
Cool.
Which
Yeah,
is for each, I don't know if how they compute it. I don't know if it's per each unit of liquidity in range, because they use Merkle as a way to distribute. And if it's out of range, you earn nothing. And when it's in range, you earn kind of that fee. So might be why it's so high, because it's only the in range liquidity that matters, and also that number may also include all of that. Oops. Oh, all that liquidity that's out of range from the
That I
Uniswap.
found the other day. Glad to see it's still up and running.
I don't know how. Yeah, you guys. I don't know if you know about negative temperatures in physics.
no, like below 0 Kelvin.
The absolute zero. Nothing can go below, but you can actually have negative temperatures. You set up the math. You say, all right, this is stat mech. Let's say what happens if we have negative temperatures. And negative temperatures is the most extreme beyond infinity type of temperature. So you loop around. -1 is the extreme max, and infinity. So that's a little bit what we see here, I guess. Plus infinity and minus infinity are the same. At 0, we have the extreme case. So you can do a lot of physics, a lot of theory building with assuming, all right, let's say temperatures can be negative. What the hell happens? Sometimes it's all nothing burgers, but sometimes it's actually insightful to do this. So yes, I thought we were going to go in the negative price / infinite liquidity ratio here. All right, fix this Uniswap. But anyways, so but yeah, USD. I don't know who's USDT. Oh,
Well, so to your question is how they calculate that APR, right? Like which TVL is the real denominator.
yeah.
I took a look at our interface where we show the 24-hour fees on ETH USDC as about 30K. And if you just take the simple TVL of 38.38 million, which counts everything in and out of range, right?
Yep.
That is like a 0.07% daily return, right? And then if you take that if you take 1.0077 to the 365th power, right, to annualize it, you get 32% APR.
Okay.
And that's the native returns. So I do think whatever denominator they're using is pretty much all the liquidity.
Yeah, so that's even better. Again, I don't want to oversell or misrepresent, but fees on, and I have one personal yearly position, which is kind of maybe 2 months in, but you look at the APY, but it's like 70% APY only on the fees. Price moved, of course, and I'm barely like positive, but fees are meant to be extremely high. if it's a wide range, like a yearly, yes, 50-60% APY. If it's a weekly and you do manage properly and you're on the range most of the time, you can go 100% plus. So that's definitely the best case scenario. Lots of risks, but if you're at the level of sophistication that allows you to be every minute able to hedge, then you can tap into these extremely high returns. And as you said, this is 35%, including all of that liquidity at minus infinity type of thing. So
And before any rewards too.
yeah, exactly. So I'm not. There's a lot of liquidity there. Interesting. That I'm not like shy of saying that APY based on fees are almost too good to be true sometimes, because there's a lot more risks to it. And if you're directional, the most risk is the token creating and being stuck with it. But there is a way to also tap into this and get a lot of APR on your fees, a large but slightly smaller fee cost of hedging, and get pretty good decent returns as well.
Really cool.
Yeah, again, as you say, the intern has been trading with Rosalie's, but it was like part of it directional, part of it waiting, and I would not be surprised if we compound the APY on fees alone. It is like exceeding 100%. But then we were wrong, we lost, we have to rebalance. So that's kind of the cost of it.
Yeah, that makes sense. And that's, I mean, you know, for me personally, I really like these wide positions for that reason. I don't want to put too much intrinsic value at risk. I'm really just looking to hunt for fees, which can be really compelling, and make the most of that through Panoptic, right? Get a multiple on that.
And you should also be somewhat not passive, but less active. A yearly or even the monthly is the one we default, but monthly, every week or two, you can walk away and then not look at it, and it's fine. And that's the one that's the retail user base that we want to target. Don't develop necessarily a bot that looks at the chain 24/7 to edge out maybe like 150% on fees and pay 100% on commissions and other hedging costs, but rather manage your position once or twice once every month, for instance, would be a very, very easy pace for most people. And that's enough for you to kind of be exposed to the volatility side, which is, yeah, definitely the unit incentive as well could help a lot. Some pools, some protocols also have more incentives. Panoptic has points as well. That's another factor in the balance. But yeah, that's just that's what I said. That's why I said the best crowd for an options protocol like Panoptic are those DeFi native users. They're extremely sophisticated. They know perps. They know LPing. They know a lot. They just don't have all the tools yet. And with Panoptic, we can offer like all of what you need for hedging, for capital efficiency through leverage, but also kind of risk management for sure.
Especially to the points question as well. I was kind of speaking with user about our points program, and I pointed out to them that we have a lot of markets that are incentivized. Most people who are interested in points seem to really just be participating in our largest market, which makes sense, right? There's some trust that's built there when they see that size. But the way that our points calculations work, if you go to that published PDF that we have, it can make a lot of sense to try to be the only player in one of these other markets, right? And so if you look at like ETHUSD CV4 on mainnet, for example, there's very few people selling positions there right now. And so, you know, that's something I've been interested in.
Maybe the entered could show a points optimizing campaign, like how to do it. This is us being a bit more complex than it needs to, but there is like a square root factor in there that's placed for exactly incentivizing early users in lower liquidity pools to bootstrap the first half of the liquidity, and you get most of your return from that first half, both in terms of TVL and also premium sold. The second half is 40% less, and it goes this way. But yeah, that's just by construct. So yes, definitely something to look into. Yeah, the sorry, ETUSDC, or those that are incentivized on Uni chain as well, I think could also be a good target.
Totally. And you also pointed out there's a separate distribution for sellers and buyers. And we've given out a lot more points for sellers. Like if you look at our weekly tweet, it's like 5 times as much, you know? And so that there's, if somebody was purely seeking points, it would make sense to be on the buy side.
There we go. Yeah, definitely. The I don't know if it's, I mean, the buyers that we see are a bit more directional, but it's not at the scale of like institutions wanting to hedge $1 million worth of options. We'll get there for sure, but the smaller players that want to get directional, do it cheaply, but also get points to compensate for the risk could be again a good place to go. Okay, I cannot switch to Unichain. Helen Keller cannot see the Unichain link there. But yeah, so this is again. Helen, how's Helen gonna do? You think, Izzy?
Well, I mean, with the expectation that she's not going to do good, we're
You
setting
can
a
only
really
go
low
higher than that.
floor. We're setting a really low floor. But no, I think I agree with everything that Steve is saying. Right, and I think a lot of LPs can probably feel the same way. Is that like I am inherently bullish. It's why I'm participating in some of these markets. Or like you said, maybe I'm not, and I've been airdropped some, cow tokens or something like that, and I want to do something with it. And you kind of still hope that, one day maybe it hits the moon. So I don't necessarily want to get rid of it entirely. But I like the idea of not having to aggressively manage my positions and portfolio. And if I can just kind of every week just take a look and adjust.
Yeah.
Maybe bi-weekly.
That's the thing. Oh, yeah, that's right. I wanted to bring the yearly, but there are the positions that are very wide in terms of their price range. And yes, I would say that the past 4 years were between 1,000 and 4,000, and that type of position would have earned fees the whole time. So that's kind of you don't feel like. I mean, I don't know if Uniswap LPs have this in mind, but yes, as an LP or as an option seller, you have the control of the time. Time is on your side. You have to say, if I want to do a daily option, there's a way to do this. If I want to do a yearly option, there's a way to do this. When you get airdropped or when you buy a meme coins, you say, I'll write it to the moon till the end of times. When you do an option, you have an intrinsic time scale. Is it a weekly, daily, monthly, yearly? That helps even with management. You say, okay, this was a weekly bet. We're a week and a half in, it's hopeless. Let me close and reposition as opposed to hold for like months and months.
Yeah. I like the weekly or the yearly options as well, just because it gives me V2 comfort, I guess. Uni V2 comfort.
Yes.
And it just makes me feel safer, I guess.
That's right. We can spy. I think this is the intern. Izzy's gone, so she purchased some offsetting positions, but that's the other person on the other side. And that's what I said. If you're in range, you're making, again, decent money in terms of exposure. So this is kind of pure money. The price did not move much. If it doesn't leave that range, that person earns more in fees as well than Uniswap. So it's 1.5% more almost of more fees. And you don't have to look at it every day. You look at it if you see a price move, but if it doesn't go below 1,000 or above 4,000, then yeah, you're earning fees and there's no risk.
Right. And to Steve's point, I guess, with his 5-year plan, because ETH is almost back to where it was 4 years ago, but he's made fees along the 4 years, and that's what we call passive income.
Oh, yeah.
That's exactly. The TikToks.
I always heard my whole thesis about, like Steth is money. It's crazy to me people are holding ETH and not doing anything with it, right? And then if Steth is money, Steth can also be lent out. Steth can be LP'd, right? And you can stack yields. So yeah, I would be very popular on TikTok, with all this
passive income. I know. It's like it's easy to get passive income. You just need $9 multi-million-dollar property.
You just need a $1 million loan for somebody.
I know. and
working on it.
I mean, maybe on one day, but yeah, that's the other flip side. You sell options, you hold this for a month, 2, you earn fees. This is the trade that intern put, but this is a hedging trade. Rudy's gone for 2 weeks. Intern did not want to manage, so you can buy protection. And if it does collapse to 1,000 or it moons, you can use this to offset losses and make money in a way that is non-directional. So you assume it's going to be predictive for the Black Swan events that would make the token go to 5,000 or go to 500. But if it's not working for you, just close it for the fee. You pay $1, $2 for hedging, and that's it.
Right.
This
And
was
you,
only $1 or $2 for how much
I
hedging?
mean, this is 2 days, $2,000 worth of protection, so 0.5 ETH. And yeah, the per day, it's not much. It's only when you do a yearly option and you hold it for 250 days, then now it does get sizable. But yeah, day per day, it's actually the theta is not super high.
Sounds really efficient, and especially on the buy side, closing is really easy compared to the sell side. So this is going to be really
That's
simple.
true. I'm having long discussions with like ChatGPT or those three. But yeah, the way that funds work and the way that some like trading firms, they have all these positions, they have to manage them, but sometimes they have futures exposure, and this works 24/7. So you have to just risk off for the night. Yeah, go to bed at 8 p.m., wake up at whatever, get the office at 9. You buy these super wide options. You do something that is a monthly time scale to offset your daily trades. And you can sleep with your, I mean, with whatever, when you're 2 years where you don't have to worry about anything that happens because you purchase that protection. And every day you pay, I mean, I don't know, a few fraction of a percent of protection, but that helps you in the weirdest case where something happens when you're asleep type of thing.
so is this hedge for the entire portfolio or just their ETH? USDC?
Yeah, we can have a look. I think this is the. All right, let's talk about Rosalie when she's thinking. At least what I said to intern is to try to hedge your losses on both sides, and we do have the exposure. Sorry, here, including the. Yeah, look at this. So I think the portfolio had a tiny bit more exposure on the downside and the risk on the upside. And I think Rosalie was saying that she had a little bit more worries about the price going up suddenly because it's gone down so much and the tariff craziness is done. So again, she has a bunch of positions, 2 positions, but yes, you can have a bunch of positions and hedge the wings, or at least hedge your unknown, which is what can happen over the next 2 weeks. Let me buy something that has a yearly time scale. And if it does exceed that unlikely scenario of being range bound, it goes super wide, then I make money, or at least don't lose as much. But yeah, so that's the portfolio wide. And I think with Rosalie, we got to that point where we understand it's not just one trade at a time, but multiple. My own portfolio also has what seems like a lot of small positions that seem to be weird, but all together it makes sense. It's just one exposure that tries to optimize every little component. So you do 5 to 10% of your buying power or margin for each position, and you do this for I don't know, 5 or 10 positions. You have like again 50% or less of exposure, and that's it.
Yeah, I guess I just hesitate to look at the whole portfolio when you think about some of like, I guess, I don't know. I would like discount some of the pools that I have or something, right? Like for like some of the meme coins, I guess, where it's like, don't count this towards my portfolio. Like I got these for free, or, you know, I'm just hoping they go to the moon. Like I don't really care about hedging out this or, you know, including this, I guess, in towards the greater.
Yeah, so exactly. So if you're a hedge fund manager or a options trader, you probably don't want to hold any stocks or any coins because of that reason, because it shifts the risk and it's like a super weird
Right.
bet. Hedge fund managers think in terms of USDC, how much you can bring the firm every year, and that's it. I would say that similarly for options traders, it's just you have some cash or balance and you want to increase it. But the key point is that you can also take these into account. The fact that Pepe is still correlated somewhat with ETH or another token, but it's not one-to-one. It's a beta number, a beta, and you can do a beta weighted delta, beta weighted portfolio exposure. And you know that if the price of Apple goes down by some numbers, that means that a similar move would be seen in the S&P 500, for instance. So the superpower of options is that one, you're agnostic of what you trade, whether it's a meme coin or a treasury or S&P 500. The volatility is what you trade, and it's the same underlying, just different vol. And similarly, between underlyings, you can rescale everything down to one number, which is your beta weighted theta, beta weighted delta, beta weighted. You beta weight every underlying. Tesla has a huge beta, 2x. S&P 500 goes up by $1, it goes up by $2 on average. It goes down by $1. So you can weigh everything back. And I was trying to see some of the betas for regular stocks. But it's, again, this is a superpower that most people may not appreciate in terms of meme coin trading. You think it's like a bet that is unique. And yes, I got the S&P 6900 before everyone else, but it's going to move like everything else. And again, Tesla has a beta of 2.2. Coinbase has a beta of 4. So it is more volatile than S&P 500. You have one option on Coinbase. It's like 4 options on S&P 500 if you scale it back to try. So it is a lot more risky to trade in that sense as well. But you can scale it back and know, okay, I have a bunch of portfolio with a bunch of options or underlyings. I know one number that tells me a good deal of the story of my risk, as opposed to just having 25 things to look at.
This may be more of a Mind Mavericks question, so I might be getting out of my depth. But when you looked at these betas, to me, that sounds like a really good approach. But at the same time, a lot of those markets are really young. These meme coins haven't been around for a while, or even through multiple cycles. So I worry about the sample size, right? Of like, you might think, oh, I've proven there's a beta of this much, but you haven't. There's never been a bear market where SP 900 existed, for example. And so I guess my question to you, did you calculate like confidence intervals on the beta or anything like that?
It's somewhat historical. There might be some confidence interval, but it is given the past month, past 2 months, 3 months, past year worth of data, and assuming that it's going to be the same moving in the future. That's a statistical correlation, more or less, but that's a statistical number. And if everything goes down, everything gets correlation of 1 as well. So it does go out of the window, but you assume that you have these kind of in between periods of extremely high volatility, high fairness, high everything. You go back to something that is maybe going back to these kind of correlations. So I would say that could be Citadel, could be Susquehanna, or anyone that trades options. I'm sure they don't put 100% confidence in these numbers, but it's a very good assessment, I'd say, of how Coinbase relates to the broader markets type of thing.
Gotcha. And I think you're also hinting at a maybe more complex model where the beta value itself changes as price changes. So therefore, you could kind of take an integral of how it should
yeah, it depends. I mean, it's just if the price were to go down 1% on S&P, it goes down maybe 4% on Coinbase type of thing. Mm-hmm. And it might still hold true if it's extremely volatile and people will sell their Coinbase shares 4 times as quickly as the other ones. So again, I'm not super well versed as to how used it is in practice, but I would say that it's a probably a very good indicator of how XYZ asset is correlated to the market.
Really cool.
Very cool. Okay.
Yeah, the goal. Panoptic eventually will have all of these cross margining, cross pools, cross everything. One place to trade, one price to rule them all. But yeah, we can do the same thing in each market now.
Right. I'm thinking to split it up, I guess, how I do even my traditional investment, right? I have one account that's for, real retirement, and that's just the index funds. That's the safe things. Maybe it's just the staked ETH or something where I'm earning like 2 to 7% maybe.
Consistently, yes.
And then I've got the separate wallet, which is the fun wallet, where I'm inherently bullish on things I shouldn't be bullish on, or my friends work at that company, so we're hoping for the best. Clearly, they've got some great minds there, so maybe that's how I should separate my wallets, and that way I can cross margin just within those ecosystems, because I don't know that I want to make decisions on,
I don't know how valid these things are, but I don't know if you follow the Unusual Whales Twitter account.
Mm-hmm. Yep.
They look at like options trades, and options are a bit like less obvious, and you can do bets short term, long term, but you can like anticipate. And their motto is that everyone always knows. You can look at trades in the vacuum, and what is an outlier can direct. Okay, someone knew when they made a bet, and the price of or the announcement made it true, type of thing. So I don't think it's a good strategy, but yeah, there's definitely like ways you can bet on a way that is made me think of your friends. You can show up on those Unusual Whale feed. iBaggy23 is has made a Panoptic trade right before XYZ. Yes.
Oh, that would be really fun. Yeah, we could set up like an Unusual Whales copycat, just talking about our opinions and what we're doing.
Exactly.
Wow.
I mean,
I
I'm sure there's a lot of this going on, unfortunately, in DeFi. Yeah, not because it's transparent that people don't want to do it, but yeah.
Very cool.
All right, this is it. So cool. Yeah, I don't know if there was anything else, Steve, you wanted to touch on the latest news or anything that happens. This is what we do sometimes with Brendan at the Options Hour.
Yeah. I mean, that's the thing I was most curious about was how uni incentives affect uni price and these APRs we're seeing in Unichain, both reward and native. And yeah, I mean, sounds like our investigation kind of showed, those numbers are pretty tangible, not financial advice or anything, but, as someone who's learning from you, I mean, that's, good for me to know, and I'll definitely act on that.
There we go. All right. Thanks very much, everyone. This is great. So we'll do conversion therapy next on Friday. But yes, this is going to be the next couple of weeks. How to help LPs be better LPs.
Therapist Guillaume convinced me that to take the big plunge, to take the big step, and get over to Panoptic from the LP.
Don't lose